All right, we are recording now. I am setting us up live on Facebook. This will take a minute. Next. It's just loading our preparing live stream.
Pretty neat that you can do that.
Oh yeah. All right, so there we are live. All right, so what I'll do now is I'll pop over to, obviously there's going to be a lag. All right, so there we are live. All right, so what I'll do now is I'll pop over to, okay, so I'm going to watch it here on Zoom so that the lag to Facebook Live isn't interrupting us. First and foremost, Danny, thank you so much for joining me here today. We're getting a lot of people asking across Alberta and even in Canada about mortgage deferrals because a lot of people are getting either layoffs or they're getting their hours cut back. A lot of people working second jobs can't work that second job right now. And just what are they going to do over this next 30, 60, 90 days to just keep afloat, keep their head above water. So we want to talk about the short-term ramifications and then some medium and long-term strategies around how to get back up on our feet as quick as possible so people's credit isn't affected and they're not looking at a looming foreclosure down the line. So if you could kind of step in here and talk about deferrals and how they work.
Yeah, absolutely. Well, first off, thanks so much for having me. It's always a pleasure to see you, at least through Zoom, but this is all we got for now. But no, I'm happy to explain the process and what I've been seeing on a daily basis and everything that we've been doing here to help as many people as we can through this crisis. So like you said, the mortgage deferral thing is a very popular topic right now. It is one of those, make or break it's for a lot of people who are experiencing these layoffs. And so first things first is to see if you're even eligible. That's what I've been finding is, where do I start? What do I do? Who do I call? And so, as a mortgage broker, we can obviously help you with that. If there is anyone that, needs a little bit of guidance to find, what number to call or what email to dial, they can, just give me a shout. I'm happy to have those numbers here available for pretty much every bank and lender that we work with. That's really your first step is let's contact them. Let's figure out, are you eligible? They're going to ask you a series of questions. They're going to figure out, what's going on. Have you been laid off? Or have you just experienced a shortage of hours? And then they'll figure out, okay, you're eligible for this. And then that's where they will now dictate, this is what it looks like, guys. We can either do even maybe just skip a payment for a month. Maybe that's enough for you. Or we can do in a full-on deferral for up to 6 months is what we're seeing. And so that's from there they will kind of explain, well, you guys will now stop your payments here. This is when we'll start up again. And that's when maybe the average consumer doesn't ask the right questions. They're just happy to hear that. They're like, oh, that's great. That's going to get me through the next 6 months. But things to keep in mind that maybe you haven't read about or haven't heard about. When it comes to the interest portion, that is still being accumulated for the next 6 months. And what's happening is they're taking that interest portion and they're going to add it to the end of your mortgage term. And it's going to be built into your mortgage. So now what you're doing is you're actually just paying interest on interest. And of course, they're not going to tell you that up front, right? But not to say that's a bad thing. They are giving you a solution here for 6 months where you can save some money. You can get through this tough period and, hopefully we can all get back to, getting back to work and, stimulating the economy. But in terms of, what that's going to look like down the road, that's what you're looking at. Now, is it a huge, huge portion? No, but it could be thousands of dollars that are worked in, but, it's a short-term loss, right? So that's typically what the things to know. There are obviously other things that, we can look at doing. And I think, we can discuss that as well.
Yeah, absolutely. So one of the other things that I had mentioned when we were talking previously is sometimes a lender may actually not want to do something for that client. And we kind of brought up a little bit that the insurers at that point can step in. So if you have an insured mortgage, is there 2 or 3 insurers? I think there's 3, isn't there?
Yeah, there's 3 insurers. So you got CMHC, you have Genworth, and you have Canada Guarantee.
Right. So we have those 3, and obviously they don't want anyone to go into foreclosure. They don't want anyone to fall back on their payments. So if the lender isn't available, there are resources available through those insurance companies if you have an insured mortgage. That's correct?
That's correct, yeah. So if you have an insured mortgage, And let's say your bank lender, for whatever reason, is not willing to give you a hand with this deferral process, or give you these options like a skip a payment. What you can do is you can now take it to the next level. And what you're going to do is you're going to contact your insurer directly, and you're going to ask them, this is what's happened to me. Can you guys help me out? In the past, they do have solutions. They have little back-end things that they can work with. It's not something that they're going to, override your bank and say, you got to do this. But they will say, we contacted them. They're saying, is there anything that we can do here to work it out? And it kind of gives you another step. A lot of people aren't even aware of this, right? Like, I was actually a bit surprised that they can actually do that. I've heard about it years ago, but I figured, they're going to be the first step is what the lender says is what's going to go. And we learned a little bit about that as well. So yeah, you're not at a definite loss right away. I would say chat with your bank and lender first. If that doesn't work out, let's give those insurers a call and see what they can do.
Right on. And that's even in a pre-foreclosure scenario. I know a lot of people will tend to bury their heads in the sand and just hope things get better. And I've run into a few clients in the past in my career where they wait until it's too late. And I'm always telling them, you know what, you need to reach out to us, the mortgage broker and the realtor, and find out what we can do before that happens. One of the things that you had touched on was remortgaging. Let's say somebody has a 5-year term. They're 3 years in, 4 years in, 5 years in. The interest rates 3, 4, 5 years ago were what? 3.5, 3.79.
Yeah.
And they're sitting at 2.44 to 2.69.
As of today, we on a fixed rate side, we have 2.49. On a variable rate side, about 2.2. And so we have these really super low rates that maybe makes sense right now to take a look at. If you were doing your mortgage 3 or 4 years ago, like you mentioned, and they're at 3.5%, well, maybe we should take a look at doing an early transfer. There's a small penalty. Usually those are actually capped into the mortgage on your transfer. And that way they can eat up to $3,000 of it. And in the short term, you're going to be saving on a monthly basis. But in the long term, at paying a 2.2 or 2.49 in the next 4 years or 5 years, that's going to be substantial savings in the grand scheme of things over the amortization of that mortgage. So we've been doing a lot of that, running a lot of numbers, trying to figure out if that makes more sense for everybody. And the numbers just continually work and they make sense. So maybe that's a better option. If you can make your monthly payments, you're not in need of a deferral. Maybe let's find a way to make you guys, save some money here on a monthly basis, and also just put you in a better financial position. More than anything, I feel like this is really making everyone analyze their finances. They're really trying to figure out, okay, what can I cut out and what can I keep in?
Exactly.
And I think that's a great solution, right? Is to just take a look at your mortgage. I mean, it's the biggest debt you'll probably ever have.
Absolutely.
And so if you can cut there, for sure, you're getting ahead.
Sure. And then the third option we were discussing was there are the cashback mortgages out there, which are starting to come back in. I know a few years ago they were doing them, and they're starting to reintroduce them. So let's say, again, somebody's 4 years into their mortgage, they've got a cutback at work, but they're still working. They can still make their payments, but they need it to pay off some debt. Let's say they have a credit card that they've been using on Skip the Dishes for April, May, June. They fell back, $2,000-$3,000, and they're looking at it thinking, oh no, what did we do? We're sitting at home eating more than we should, right? Things like Skip that are attached to a Visa. So obviously option number 3 potentially would be to remortgage at it's a slightly higher interest rate, but it could be better than what we got 3, 4, 5 years ago, right? So
exactly.
So what do those look like right now?
Yeah, so we're seeing a big jump now. A few of our lenders are now bringing back this product, which, like you mentioned, was a familiar product back in the day. Back in the day, you could use a cashback mortgage for actual down payment. That's not allowed anymore. But what it is you basically have a little bit of a higher interest rate, and they're going to give you back a certain percentage of your mortgage. And so in today's rate, let's say you have a $300,000 mortgage, we can do a 1% cashback for 2.99. 2% would be a bit higher. I believe it's 3.14. 3% is a bit higher than that. But even if that's a bit lower than what you're having right now, you're going to get money in hand. Now let's take a look at, okay, well, you have that 20% interest rate on your credit card. Maybe it makes sense to take that extra savings, pay those off. Well, now you've freed up some monthly expenses as well. Maybe a little money in your pocket. You're still at a lower interest rate. There's so many things that we can do, right? You just have to take a look at it, and it's always situational. But having these extra, products available to us, it really is just giving us more and more solutions to help people out. And so it's just a matter of exploring your options. You just really got to, reach out. Me and you, we're pretty accessible. We can, we're working from home now, especially. So, in the evenings and weekends, I can run numbers for somebody in, 30 minutes. We'll have a completed application and we'll know exactly what we can do. Right. So, I like the product. I think it makes a lot of sense right now to do a cashback mortgage. Even at these interest rates, like although the lowest spectrum could be a 2.49, for 2.99 for getting that money in your pocket to get you through these next couple of years and also just put you in a better solution now. Run the numbers, we'll figure it out, and I think it'll work.
What kind of ballpark number are you seeing if somebody goes with one of those cashback products? Let's say somebody has a $400,000 home and they do a 2.99 for 5 years. What's a ballpark number that they're looking at getting back with this cashback?
So generally, depending on the purchase price and the mortgage, of course, but I don't like the 3% just because it is a bit higher than the rest. But even doing like a 2, right? We're looking at, we ran one the other day where a little bit of debt, but they had a higher interest rate at the time. I think it was about 3.69. We got them in at 304 on a 2% cash back, and they're looking at putting like $8,000 in their pocket. And so, $8,000 to put, let's say you pay off your credit card with $5,000, put the rest in your pocket, for the next couple months just to get you through with these groceries and, the odd skip, nothing wrong with that. I think, like I said, it makes a lot of sense. And so it's dependent on the mortgage amount, but we can look at all, the different segments of it. And if it makes more sense to take a little bit of a higher one to get more money, sure. If it may be just a lower one to get you a little bit back, still makes sense. So
right on. And the way I'm seeing this a little bit is, let's say there is that little bit extra money. What a lot of people are realizing now is it's even more important now to have an emergency fund account.
For sure.
Kim and I set that up a few years ago when Christian got really sick. As I told you before, we ended up in a significant amount of debt back then. And we managed to get slowly but surely back on top of things and put together an emergency fund. So in the event that he ended up sick or I ended up not making a paycheck for 3 months, we had that 90 days money stashed away. So, if we lived below our means and cooked food at home and didn't go out to watch movies, didn't go on an expensive trip, you could stretch that money out for quite a while. So, who's to say something like this isn't going to happen again next year or in 3 years or 5 years? It'd be nice to have a little bit of just safety there. So if it happens, anything happens in your life, just having that there is so much, just relieves so much stress and pressure. So that
more than
that kind of makes sense. So another thing I wanted to talk about was what a lot of people don't realize is and what we've learned for years is snowballing debt. And you've touched on it a few times, paying off the higher interest credit card. So let's say somebody remortgages or they even go deferral for 90 days. That mortgage payment's no longer happening. Is there a possibility that there might be a little bit extra money there because they've deferred for 90 days or they've remortgaged and taken that cash to pay off that higher interest? So that payment's no longer there. So my thought around that would be, now let's say we get back to work, 90 days, 120 days, let's say you've deferred your mortgage for 3 to 6 months. When you're back on your feet and you've snowballed one of that higher interest cards, you can apply that then to your mortgage. So I know one of our strategies is going bi-weekly. Instead of monthly, you go bi-weekly and then you pay that interest out a little quicker. And then maybe you'll be in a position where you can put an extra $10 at bi-weekly or $20 or even $50 bi-weekly against that mortgage. And then that interest on the interest that you've accrued from deferring will get chewed up by you making it back for it. Obviously, we want to focus on that higher interest, lower amounts owing first. But if somebody doesn't have any other significant debt, well, that's a certain consideration. And obviously, that's something that you can help with and coach, especially with first and second time buyers who may not know what they owe.
Yeah, absolutely. Yeah, I think it's certainly a solution to look at. Obviously, once again, very, very circumstantial. I don't know where everybody's at, but if you are able to somehow get through that and get your mortgage, deferred, does it make sense to take advantage of some of these government programs where, if you have been laid off, you can get some of this money from them? Maybe take a look at paying off those debts with the extra money, or like you said also earlier, right? It's, maybe even building a little bit of an emergency fund with it. More than anything, I think this is very eye-opening, right? It's a situation that we've never experienced before. And so little things that can really change, paying down your debts, especially on mortgages, like you said, going bi-weekly, accelerated bi-weekly payments. One thing that people don't realize is you can literally call your customer service number of any of your lenders or your banks and say, I want to increase my payment by $50 a month or $100 a month. And although it seems small, that effect of doing that on a biweekly payment for the next 5 years, you will cut your amortization down by years. And so although you're taking this deferral in the short term, maybe we're looking at now paying off some debts with the extra money that we have. We're taking a cashback mortgage to help with that. And then once you get back on your feet, now increasing your payment again. Well, even though you've had that interest built in, by making those extra payments, you're going to pay that off. And so a lot of things we can look at, a ton that I can help you with. It's all about the numbers, right? And I love that. That's why I do what I do.
Yeah.
And so, yeah, I think it's a great idea.
Excellent. So in summation, both you and I are here to help. And if anyone wants to reach out to Danny, he's really easy to find. Same with me. Reach out to me. And you know what? If I'm not your realtor and Danny's not your mortgage broker, that's totally cool. Just, you know what, reach out to us. If there's someone you know and trust and love and you support them and they support you, use this information and go to them, you know, hat in hand and say, hey, what do I have available? That's totally cool. We wanted to provide information today and just support people as much as possible in these times. So Danny, I know you mentioned you had a list of numbers and lenders and stuff. In the comments on our event, I'm going to close. I think we're at 16 minutes now. I wanted to keep it at 10. So if you wanted to put those in the event, put them in as a comment. So if somebody is uncomfortable calling us, you know, it's uncomfortable calling a realtor. It's uncomfortable calling
for sure,
because we're scared.
Yeah.
So post that in the comments there, and anybody that's seen this today, feel free to reach out to me via message if you have any questions. Danny, you as well. I think you're easy to get a hold of. So
sure.
I don't think we've seen any questions. So we'll wrap up here. We'll wrap up our recording, and just so everybody knows, this recording will be available via Danny and I on both of our social media platforms. Thanks again, Danny.
Thank you. Appreciate it.
We'll talk to you soon.
Take care.